Hello traders, I hope you are doing well. It's teacher from MTK. I'm going to explain to you the pound trade, and as you can see, I have a pound trade open here. It's pound USD. It was a sale today. Yesterday it was a buy, and I also have a pound yen here. It was a buy from yesterday, as you can see here. I explained to you how I managed to catch. Now you can see 113 here and some 8. So I'll say nearly 200 pips. Okay. As you can see, the profits are here, and today I managed to scale in my lot size. I got in with a bigger one. As you can see, it's 0.25 than the 0.2 that I had, showing an increase on my account. As you can see, that's the other part we need to talk about. It's about money management. How do you manage your risk, and how do you manage your money? I don't want a scenario whereby you lose a trade and you end up blowing all your account and bleeding all your equity. That's not a good place to hang around. Okay, so I will explain to you the trade, what I was looking at, and how I see the markets in general, and what leads to this. Okay, the first thing that I look before entering is the market mega trend. So for the market mega trend, what we need is to identify a peak, something like this. Let me erase the chart. Where is the line chart here? Sorry. Yeah, now it's black. You can see it. Okay, so what I want to look and I want to see before is what I call the market mega trend. What the market mega trend is the real trend of the market. So I go in from a peak here. I move up, first move one, and consolidate a bit, and then it pushes up, and then consolidate it and pushes up again. So this is gonna be 2, and this is gonna be 3, and I'm gonna be looking for some signs of what, of reversal for price to go down. This is exactly what I was looking for before I entered the trade, and this, it might continue going another 3 levels down, or it might be what we call a reset. So what occurs on a reset is that the market maker is booked profit, and there's no need to reverse the trend. He needs the price to go up, so there's no need for trend reversal. Okay, so this can be over 3 days, 3 weeks, 3 months. It depends on how long the market maker, but it's called the 3-day 3-level cycle. Okay, so let's look at the cycle in pound USD and how it looks like on the right edge. So here we have pound USD. I hope you can all agree with me that this my color is not good. What about blue? This one. I should have selected a color long back. I think black is good, but my chart is going to affect. I'm sorry, guys. So here we have a peak. Okay, so from this peak, how you can ask, how did you determine that was your peak? I need 3-day 3-level cycle to okay with 3 drops from the previous. It might be from a reset or from anywhere. Okay, so this is what I have. Level 1 over here, level 2 over here. Okay, push number 1, push number 2, then push number 3. I'm looking for a W after this. I will show this in my upcoming course. So if you want to learn more, keep subscribed to the channel. I'm dropping the video soon, guys. So after 3 pushes down, I need for a reversal. I'm looking for a reversal. Okay. The market reverses and now it angers. I'm going another 3 levels the other direction. As you can see here, the third one is over here. Okay, so you can see 1, push number 2, and the third one being the most aggressive, the pump to dump move. So basically what they are doing on the pump to dump move is that they are pumping price for people to pile on for longs. See here, we have moving average crossovers. This is a buy signal in any textbook I have read, guys. They tell you. So the market maker uses what we know to take our man. So if I am in level 3, day 3, after a rise of almost 3 times ADR, that's why I have this number here. After moving 3 times average daily range, I'm looking for a reversal or what? Or a reset. I'll show you all the examples of a reversal and a reset. And after I was in level 3 here, I was now looking for shorts. But early during the day, the market break down this low here. They hit the stops low. I knew they were gonna rise. This is a DNC zone, but if you can identify the market clearly, you are going to know that no, they're going to come back. That's why we also do risk management. Sometimes you have to risk. But after this peak was in from Tuesday, I knew from the crossover of the what, the 50 and the 200 that it is a what, a sell day tomorrow, confirmed by a shark fin over here. It tells me also I'm looking for shorts. They did not reach the high here, and they did not reach this one. They did not clear this one. So this all is a trap zone where there is trapped volume. So the market maker is trapping volume in this whole bunch area over here, so that he can clear the zone to the next level. Coming on to today, this is what it was looking like before I ended the trade. Here I show you the little pattern again, guys. How it occurs every day. It's called the daily pattern. Something like this. Consolidation. Market maker is the stops high, induces people to go long, comes back, clears the stop, drops price, reversal, back. It will come back into the zone. We know that there are 3 moves in here. 1, 2, 3. So you wanna sell here and you wanna buy here. The same is opposite. Consolidation, it breaks low, hit the stop low, W formation. It might be an extended, or it might be a perfect, or it might be a high W. Okay. It comes back, it goes 1, 2, 3, anchors, goes back into consolidation. This is the daily pattern. It occurs every day. Sometimes it's hard to identify, and the rules that we use to trade in when we trade in line with market makers is that they are created by the market maker. The market maker does not need to follow them. Okay, so he's creating all the rules. So looking in, I showed you the daily pattern, how it looks like. So this is something like this. I will draw it side by side. Okay, hit the stop high, come back for a retest. 1, 2, 3. Okay, so you can see in here, this was all a band of tight consolidation in here. If you can identify the range, it's 17.4. That's the range I wanna trade in. The range that is below 50 pips is going to show me the tight consolidation. What were the other factors? We had price breaking in 1, 2, 3, ending in on a pin over here. When that pin was inserted, I already knew I had a game plan before today it's a sale day, so I'm looking for what? For sales only. Price goes down. Is the stops high again with this green bar tool induce last people to go long. When this candle closed in red here, I was short. You can see the sell in here 0.25. And for my stop loss, I always talk about this stop loss should be so small so that your risk to reward can be high. The stop loss is above the high of the day in here. And this is my stop, and I capitalized on all this warm move. I think this is something like more than 5 to 1. I always talk about a good risk to reward ratio is what you need. And you can see in here there are pins to the high 1 2 3 M formation. M formation is the mile above the blueberry, this line in here above the watermark after a 5200 cross showing what? A downtrend. That's with that with the factors that I was looking. Also, not forgetting one of my tools and the most powerful one over here, the TDI. It helps me identify divergence and some entries. If you look clearly, we have price forming a high in here. It formed a new high when it came for the second leg, so the more people will trade the higher in here. But if you look in here, the TDI slow is what is diverging. I'll call that divergence. And if you look at the first leg, it's outside of the band, showing that there is volatility, and the second one is contained by the band, showing that there is no what? No volume and less volatile. So I knew right away when it turned red, which tends to be a brings trade session, it was a sale. Okay, so I'll go ahead and explain the pound yen from yesterday. From this one, I had also a trade from yesterday. Let me show you. I always talk about the market maker pattern. It plays out every day. This is yesterday. From yesterday, we have the pin in here. This was my buying point from yesterday. Consolidation. First leg not that much, but they came in for the second leg, which was more aggressive. You can use the line chart to identify it. Yes. You see, the first leg is here, and the second leg there's also a W contained inside. So it came first here and made a W. I'm long. My stop loss is here. Buy position. I have the whole move to capitalize on. The reversal of the day, I always tell you to sell on. This one. It's a sell trade. We can go on and do. Every day there's something that looks like this. Trust me, guys. I know this is Monday. What they tend to do on Monday, there is no consolidation or little. So because they use the gap to start where they want. Oh, this was supposed to be our consolidation. Stop high, come back again. It's a sell all day. After they trap people, what? At the high. Uh, it's the same 14th February. Consolidation, hit the stop high, come back again aggressively, leaving all the pins to the high here. Price drops out, comes and forms a W of the 200, and it traps back. It's the same pattern I've been drawing to you, this, if you know about it. Can you tell me that these things are different? It's only the variations that you need to know how this is, how they differ from each other. It's the same pattern, consolidation, stop and below yesterday's low and below the 200. People are just short. Look, all these 10 candles below the 200. Everyone is selling. Price boom goes up. There is something that looks like it, guys. Trust me. The pattern might not play on the whole pattern might not play out on the same day. It might carry over to the next day, but it's still the same shit. Consolidation, hit the stops high, come back again. You're a seller in here, price goes down. It's the same. This was a buy. It's called a safety trade. It was a buy in here. Something like this, consolidation, W formation, goes 1, 2, it forms an M, it comes back. One, two, three. We have this a 1, 2, 3 like this. Then we have what is called a 1, 2, 3. Then there's a 1, 2, 3. It's like the first move and the second are joined in one move. It's almost the same thing that has happened here. So it won't be easy for you to identify how the moves played out exactly. But I can see I can continue back February. The same pattern, consolidation, stop and low, rise, M formation, back into consolidation. Consolidation continues, stop and high. This was NFP, somewhere around in here. It was a sell trade, railroad track. Stop loss above here with the whole move to capitalize on. I can go on and show you the pattern. This one, consolidation, stop and high, information, sell all day, comes back into the range. Let's continue to my pound yen. It's a swing trade, 117 pips. Consolidation here, it's tight, stop and the other stop and of the second leg of the W is too deep on this move. A buy was in here after I crossed above the 13 EMA. I was in, and stop loss below. You can see the trade really played out nicely, 117 pips. Okay, thank you for guys. If you like the video, subscribe, like, and share with your friends. Thank you.